Thank you, Stacy. As you guys can see, the team's put together a pretty dynamic agenda that we're really excited about tonight. So thank you again for joining us. I have the privilege of introducing our first keynote speakers this evening. And many of you in the room know that digital is about rethinking the relationship between information, processes, and people. Our first keynote speakers are going to talk to us today about learning from digital distributors. So let me introduce you to Matthew Josefowicz. Did I do that? He's the president and CEO of Novarica. He's got extensive expertise in insurance and has been providing that expertise to CEOs for the last 2 centuries, decades. It's all around advising them on really technology, industry challenges, and operations. Matthew's research in technology has been presented at some of our largest conferences in this industry. Matthew brings with him Stephanie, today an associate at Novarica, and she is responsible for spearheading their InsurTech and industry trends. Please join me in welcoming Matthew and Stephanie.
This would work better if I had slides. Daisy? I've done this before, tap dance around having no slides, but it will work better if we do have slides. There we go. Awesome. Very good. Can everybody hear me up there? Can I use the mic? Anybody not hear me in the back?
It's on.
This is on? Yeah? Okay, cool. Excellent. Well, thanks very much to InsurTech Hartford. Thanks for inviting us to speak. We're glad to be associated with it. For those of you who are not familiar with Novarica, we're a research and advisory firm focused on the intersection of insurance and technology. We work with over 100 insurer CIOs, providing them insights and best practices based on the experience of our senior team and our research council. For anyone who is here for the last event, I believe my colleague Chris Eberly presented our sort of InsurTech framework. InsurTech is a large category that includes, as one of my colleagues used to say, apples, oranges, and cats. There's a lot of different types of startups that are relevant to the insurance industry that use technology that are lumped into a single category called InsurTech. We use 4 broad categories to kind of separate them, and because we're consultants, we came up with a cute framework based on ABCD. The A's are the analytics arms dealers, everybody who's involved in helping insurers leverage new data sources and more powerful analytics. So that includes AI as well as data mining. Beneficial bots is a catch-all category for general purpose technologies with special application to insurance like drones or IoT. The creative carriers are the folks who are actually taking risk and delivering it and modeling it in a different way, leveraging modern technology. And then the digital distributors, which is what we're here to talk about today, are the folks who are primarily working for existing carriers or reinsurers, either functioning as MGAs, MGUs, program managers, or just traditional retail brokers, but leveraging technology and new customer behaviors, new channels to deliver that insurance and that buying opportunity and service in a different way. This is just a snapshot of some of the folks in the different categories that we publish about in our annual report, which Stephanie is the lead person on. So I wanted to focus on 3 key lessons to kind of frame the rest of the conversation this evening. What is it that incumbent insurers can learn from InsurTechs, and what do new startups need to be thinking about in terms of what are they bringing to the distribution channel? And I see people taking pictures of the slides. If you come up and give me your card afterwards, I'm happy to send you a copy of this deck. The first is to embed into the moment of need. The second is to simplify the experience, and we can all think of InsurTechs, prominent InsurTechs who are focusing their value on that second point. And then the third is to present the offer in the buyer's words and in terms of the buyer's needs, rather than what we're used to thinking about from the sell side in the industry. So with that, I'm going to go briefly into a couple of different InsurTechs and have Stephanie kind of take you through some of these examples. The first is what we call the OEM or partner model. This is not a new model. Some of the folks on this slide have been in the business for years, but the premise of the OEM or partner model is that insurance is really a second order need in most cases. Most consumer insurance purchases, small business insurance purchases, are not about risk management. They're about compliance. They're buying something that they need to buy in order to do something they want to do. Hire employees, buy a house, drive a car, sign a contract. And so all of these companies are focusing on getting into the middle of that point where the buyer is doing something else, has a requirement for insurance, and then they come in and are able to fulfill that requirement.
Yeah, so to sort of...
Should be.
Your microphone's not either, switch mics.
All right, let's try that again. So to sort of piggyback off of that, there's an interesting mix of sort of startups and established companies in this space that are really sort of using the OEM partner model to really sort of target consumers and small businesses at that moment of need. One example here is Bunker. Bunker is a startup that offers liability insurance for small businesses and freelancers directly online, and the insurance itself is actually embedded directly into the sort of compliance and contract process, so really sort of an interesting channel to target consumers at that moment of need. Another sort of more established player is AP Intego, direct online MGA that offers small business insurance, but also interestingly workers' compensation insurance that's sort of pay-as-you-go, that's integrated directly with employer payroll systems. Another sort of more established player in this space is Gusto. They're an HR, payroll, benefits administration platform that offers sort of like benefits bundles and packages directly through the platform itself. And sort of on the subject of HR admin platforms, I do think that Zenefits kind of deserves an honorable mention here. Of course, they gain sort of notoriety for their legal missteps around licensing, but there are still some sort of lessons there to be learned for insurers. Number one, the focus on the consumer buying experience certainly isn't going away. That's sort of the bread and butter of a lot of the sort of more innovative new entrants to the industry. And also just this model of sort of using OEM partner distribution to find sort of new channels and target consumers at those moments of need, when done correctly, is certainly viable and valuable for consumers. And sort of beyond kind of point of need, there are also a lot of startups that are sort of targeting point of convenience, I'd say, or point of sale. So companies like Ticket Guardian, which offers, they're a startup that offers sort of episodic coverage for live ticketed events, things like concerts, sporting events, etc. And also a handful of startups targeting sort of warranty insurance. So an example here would be Mulberry, and they offer sort of a plugin that allows e-commerce companies to offer warranty coverage directly at point of sale. So.
Yeah, so one of the key elements here is, one of the challenges in entering into the insurance market and selling, is trying to establish a brand with end buyers, is the customer acquisition costs. And if you look at some of the folks who are going direct to consumer or direct to small business, the biggest expense and the biggest challenge is building that brand and minimizing that customer acquisition cost, and that's what this OEM or partner strategy can be a very effective solution to. For those who are going direct, obviously these are some of the larger brands, more established brands in the space, targeting either consumers or small businesses. And what most of these companies are hanging their hat on is the experience simplification, right? For a long time, insurers have said, our product is too complex to be sold directly, and part of the answer to that is simplify the product. And if you can't simplify the product, simplify the experience. And one of the advantages of the revolution in digital over the last decade and a half is that it's now possible to create that simplified, interactive, smart experience online or with a combination of online and a contact center in a way that was very challenging 2 decades ago. And especially with the smartphone revolution, which is only 10 years old, it's kind of astonishing to think about the fact that over the last 10 years, we've gone from nobody having a computer in their pocket to everybody having a computer in their pocket. It's really changed what the consumer expectation is of the ability to access information and transactional capabilities. So some of the folks on this slide are using their data and digital expertise to simplify that buying process and make it easy to turn shoppers into buyers.
Yeah, so a lot of, in terms of experience simplification, you know, Lemonade is an example of a company that's certainly sort of made their mark iterating on the consumer buying experience around renters insurance. Obviously, Lemonade, direct online renters insurance company. Part of their model is paying out unpaid claims to charitable organizations, and they also famously paid out a claim using their AI in a matter of seconds. But noteworthy also is that there are a number of other startups sort of iterating on this experience in buying renters insurance. Companies like Jetty, Rhino, the Guarantors, etc. Another company with a sort of interesting approach to experience simplification is Cover. Cover is a sort of mobile-forward startup that effectively allows consumers to purchase insurance basically by submitting photos through their smartphones. And so, you know, they offer coverages for things like individual items, but also other personal lines, home, auto, etc. And a lot of the sort of activity around experience simplification, as Lemonade and Cover show in companies like it, a lot of this activity has occurred around personal lines, sort of the high transaction lines like home, auto, etc. But there are, you know, sort of a handful of companies also iterating on sort of more complex lines. One example here would be Pie Insurance. They offer workers' compensation coverage directly online for small businesses. Again, workers' compensation coverage, slightly, you know, a little more complex than most personal lines, but they're sort of iterating on the experience around it. So.
Pie and the other folks in the workers' comp space are doing is taking advantage of how standardized that product is generally and being able to rate based on class code and location and number of employees, leveraging third-party data so that they're simplifying the application process pretty significantly. The last one that we wanted to talk about is the way that startups are using technology to help navigate complex lines. So some of the folks on this slide are doing things like deferred payout annuities, you know, BOP for small business, individual life. But what they've done in many cases is they've reconceived the product and changed the experience so that they're really focusing the value proposition on the consumer need rather than the way the industry thinks about the product. The best example is Blueprint Income. Is anybody familiar with Blueprint Income? Yeah. So they are it's basically a deferred purchase annuity that you buy in installments over time until your retirement date. But they've repackaged it with a very simplified retirement calculator, the kind that you would see on any brokerage site, to show you what your contribution would be and what your payout is going to be. You know, I think for an industry, the annuity industry, that's been saying for years that the product is too complex to not be sold by high-load salesmen. I think Blueprint is a really interesting example of a counterexample. All it takes is the desire to do so. And they've really created a very compelling experience. Obviously, customer acquisition cost and their customer acquisition success is still to be played out. And I have no relationship with them. I just think it's a fantastic idea.
Also, sort of on the property casualty side, another sort of interesting business model as well is Next Insurance. They're operating in small commercial, and essentially what they do is they offer kind of curated small commercial products for niche market segments. Examples would include, say, like fitness instructors, beauty professionals, segments of that nature. And what's sort of interesting about their approach and the approach of companies like it is that they're sort of applying a kind of program business type model in the sense that they're segmenting segmenting, or in this case kind of micro-segmenting target markets and aligning and developing products for those markets. And so beyond sort of the product itself, there are a handful of companies that are also iterating sort of on the complexity of underwriting, specifically in term life insurance. So these companies are sort of using, data-driven, non-medical, fluidless underwriting to offer term life insurance directly online. Companies here would include startups like Bestow, also Ethos, Haven Life, companies of that nature.
Yeah, one of the interesting things about Next, the way they're focusing on segments like that, I used to tell my friends who are not in the industry that there's a very small niche of the commercial lines market called program business, where they start with a customer segment and they design a product for them, and then they know exactly the channel that it's going to take to reach that customer segment. And my friend looked at me like I was an idiot and said, "Why isn't that the whole commercial lines business?" So some of the takeaways here, these are just a few, very few examples, but again, going back to our key points, the takeaways are to really focus on the buyer experience, the buyer need, and the buyer perspective. You know, the insurance industry for a long time has had a real inside-out point of view. It started with the actuarial calculations and ended up with the marketing positioning. And if the InsurTech revolution is doing anything for the industry, it's helping them change that perspective. So that's, I think, the most valuable thing that InsurTechs are doing for the incumbent carriers, is teaching them to think outside in, teaching them to think about buyer need, buyer experience, the entire experience as the product. So a couple of questions that insurers should be asking themselves, or things they should be doing. You know, again, focusing on the customer need. Why does anyone need insurance? In 9 out of 10 cases, it's a compliance need. You know, I was talking to Kevin before, and we'll get into it more on the panel, but people don't need liability insurance. What they need is a certificate of insurance, so that they can sign a contract and get on with their lives, more than they actually need the coverage that stands behind it. And that's a very difficult thing for people in the industry to understand. People who understand risk, people who understand, you know, the importance of coverage. This is not to minimize how important this is. It's just to get into your buyer's head and understand what's important to them and position your offering, you know, in that language. Going along with this, you know, we've had a model for a while that says insurers need to simplify the front and complicate the back. You need to stop asking unnecessary questions. You need to think about how long it takes to go through the buying process, to think about how painful that buying and underwriting process is compared to your peers. But the way to do that is to leverage a lot of analytics and third-party data sources and digital workflows in the back end. So simplification creates complexity, it just creates it behind the screen. And that's the big challenge for insurers. So with that, I will hand it back over to Kelly. If anybody'd like a copy of these slides, please come up and give me your card. I'm more than happy to email them to you. Thanks a lot.
Thank you, Matthew.